What's going on, investors? This is Tyler from Augury. In this video, I'm going to kind of cover my afternoon routine and give you guys a glimpse as to what I do at the end of just about every day looking for new stocks for my portfolio. Before we start, what you should know is Augury is a investing newsletter. We have a program where we kind of send out all of our ideas. So anything that you see in this video, if there is something attractive to investors or to me, I will go ahead and share the idea with other investors inside of our community. The second thing you should know is that we have an investing journal. This really kind of defines what the process, our investing process, looks like, and gives you an opportunity to judge these companies for yourself, which is extremely important in investing. But without further ado, let's kind of get into the afternoon routine, what it looks like, and why I use it. I got a couple notes here, and as I go through this, it may seem like I'm going through these companies really quick, but you have to understand that investing is a game kind of opportunity cost. You want to be allocating your money to the best ideas possible. And like I said, I do this quite often. I actually decided to get out my research stack here. These are all the companies that I've gone through. These are actually only the good ones. So you'll see more of what this looks like in a minute once I go through it. But one of the reasons I really encourage people to use this process is because when I started investing, this is exactly what I did. And it actually does a pretty good job teaching you why the stocks are moving and why stocks move and where they move to, etc. So you can actually, start coming up with your own strategies and, kind of places to look. As you go through enough of these, you'll actually start to, recognize different patterns that may be attractive to you, or, you can figure out ways to unlock value from the market. So I like that. I also like this because you are actually, it's almost like as I come to learn poker a little bit better, it's almost like you're playing poker post-flop. So it's like you see the board and then you decide if you want to play or not. And that kind of gives you a nice advantage. So I like that a lot about this. And then finally, the reason I really, really like this is because it allows you to basically go through a range of stocks in all different, oops, I hope this mic was on, range of stocks in all different industries. And you're looking at a bunch of different businesses. So it helps you understand or maybe figure out what style of business you want to allocate your money to, where you're going to be comfortable allocating money to. Because fact of the matter is every business is different, right? Ford is a much different company than a Musel and etc. So, you can start to develop your own style using this method, right? So let me just check on the audio here, make sure that we are hooked up the right way. And then, all right, so hopefully the intro was caught and it was heard. If not, oh well, we will start. You will be able to, pick up on what's going on here pretty quickly once I begin. So I'm going to start my screen share. Screen 2. All right, and now I'm on Google. Everything should be good to go. And from here, let's get this out of the way. I'm going to go to finviz.com. Now, this is a really, really easy process to kind of go through. And really all I'm doing is I'm going to go through each one of these stocks on the, biggest gainers list and biggest losers list, right? And what this is going to do is, allow me to, one, see why these stocks are moving, and two, kind of gauge if there's any value in these for my portfolio. So I'm going to start here with the biggest losers list. And IMVT. Okay, market cap is $1.5 billion. tons of cash burn, burning about $1 million a year. Book cash. Okay, so it's trading 3.5 times book, 3 times cash, cash burn. Okay, we see some shares being dilutive here. How old is this company? Okay, so not too old. That's probably what this is all about. This is something I'm really not interested in. I'm just going to check on, what this business does. See if we can see what kind of drug this is for. Okay, so it's an eye disease. Those aren't the best runners. Okay, so this one's donezo. We don't even need to look at it, other than the fact that that thing really fell off a cliff. If you actually look at the chart, oh, is that monthly chart? This is the most impressive aspect of this business, is the fact that this thing really took an absolute bath. Okay, enough of this company. On to company 2. MUDS. This is, okay, so we got a shell. So this is some kind of SPAC play. Let's see who they're merging with. I don't really see anything. I'm not really interested in any SPACs at this moment, so that one didn't have a shot from the get-go. Okay. This is a China company, as we see here. Market cap 47, sales of 14. Is our sales growing? No, they're basically flat. Trading at 680, cash per share is 379. Book per share is 1611. But this is also this is already entering the too tough pile for me. Okay, plant-based products. I already have a company that kind of does this. I guess this is a little bit different. No, I'm not interested in this. And that's the thing too. You don't have to go through these, too intensely. It's your portfolio. It's completely up to you whether you want, this company to make into your portfolio or not. Okay, here we see massive cash burn. Sales are down 35%. No history. Let's just see what it does real quick. Okay, so it's a battery, storage solutions, renewable energy, yada, 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 yada. There's a million of these companies. This one has sales of none. Okay, so immediately I'm not paying $1 billion for no sales. Sorry. ETON. Another one that's right off the bat, taking a bath. Okay, market cap $185 million is the sticker price. Sales of 11.8 million. Okay, book and cash significantly lower. Let's see what kind of drug we're looking at. Hypertension. Nope, not interested. Next. And this is really what the process looks like every day. And I obviously have my notebook here where I'll record any tickers that I find interesting. So far, we're getting nothing. This is kind of like fishing. You're throwing out a line and you're not going to find something every day. So 140 million sticker price, income of negative 51 million. Book. Okay, so it's kind of trading near book, kind of trading near cash. Let's see what this is, a UK stock. Okay, let's see. What does this chart look like? Okay, so perhaps a raise higher. Okay, Cancer. Phase 1. Phase 3. Phase 2. Okay, so these guys got a lot going on here. This is going to likely see, significant cash burn for a while out of my playbook. Okay, we already looked at that one. Let's just check, see what this is. Another shell. Let's see if they UpHealth Holdings. Not sure what is UpHealth Holdings. UpHealth Holdings. Oh, look at Delray Beach, Florida. I guess that's just one of their locations. Behavioral health. Okay. Semi interesting. Like I said earlier, not looking for any SPACs. Now, when SPACs were hot, I was looking for SPACs, so just keep that in mind. I'm just not looking for that now. Okay, $200 million for this company. Okay. Not really. Doesn't have any info. Let's just take a quick peek. What is this one? Oops, wrong one. Okay, $85 million cash, 200 million. And next. What's up, Dan? Yeah, I can't get off BAMSEC. I've been using it for years, so it's really hard for me to move to anything else. If you're going to try anything, I'm drawing a blank. There's a really good one out there that looks pretty awesome. I had talked to the guy that is starting it. It's better than BAMSEC for sure. I can't think of the name right now. I'm sorry. Once I think of it, I'll try to pull it up next. Okay, VMD, $285 million sticker price. Okay, $135 million of sales. Sales are up 20%. We actually do have earnings, which is interesting. This is got book of $1.15 a share. 40 million shares outstanding. 25 cents. Let's see how big this balance sheet is. 25 cents divided by $1.15. 20% return on book. Okay, let's see what this is. Okay, respiratory health services. I always hear a lot of people with that sleep apnea. Okay. I'm actually going to go to Guru Focus, VMD. Let's see what kind of history we have here. Healthy gross margin, like that. Revenue has gone from $30 million in 2016 to $135 million. That's pretty good. I mean, $80 million to 130. We might have seen had a little bit of a COVID tailwind. Is this a U.S. company? It is a U.S. company. Okay. Okay. D. What's today's date? 6/1, right? Okay, so it looks like we got a little bit of a mess going on here. Hence why it's, I don't want to say so cheap yet, but looks pretty cheap. My time is pretty limited here. I just wanted to do this before I gotta go because I like to, at the end of every day, I like to see, what's available in terms of what can I invest in. Because you never know. Sometimes you can find a really, really good opportunity. Okay, so this needs to be, this is a digger. So you're going to have to really start reading into this. So we got some stuff going on here. There's this is not clean, but it could totally be worth looking into. Okay, no one's covered this recently. Yeah, this one was gonna take way too long for the time I have. Definitely am gonna look into this because it looks kind of interesting. I guess I'll just go through I'll finish going through the fundamentals real quick. That one earns its way onto, earns its way past the initial review stage. So this document I need to read. Here's a quick investor presentation. Yeah, it looks pretty profitable. Okay, so it's also listed in Canada. So they got some stuff coming in. Yeah, annual revenue, $131 million. I mean, look at from 2016 to 2020. That's pretty good. Okay, basically they're saying, baby boomers are their customers and there's more of them coming in. They're projecting industry is going to go from 62 billion to 98 billion. So it looks like they also have some kind of technology program, database. Revenue model, this is a pretty important slide. Monthly rental fee. Okay, covered by Medicare, uncapped rental contract. Average monthly client revenue is almost $1,000. Okay, good to know. $31 million, 285 market cap. But, it's earning, it's returning about 20% on book. So, okay. Balance sheet's healthy. Retained earnings were flat. Margins are good. All right, where's the cash flow statement? $4.6 minus 1.8. Okay, what's the price of this stock? 70 times 40 million shares. 725 times 40 million shares. 290. Let's say 12 divided by 290. 4% yield. Yeah. But I mean, pretty decent growth. What's the pretty decent? I mean, this is a pretty good business. You got to see what happened there. It looks like there's some kind of, I mean, it looks pretty big of an issue. Where'd our Finviz? Let's, I guess we got to put these over. That's definitely worth looking into. I will get back to that one. And it looks like it's really off a cliff. Okay. I'll draw a little support guy here. The $6 range. At $6, 6 times 4, that's 240 million. A lot better than what we're getting now. Hopefully it crashes more. Looks like it's not afraid to really sell off. All right, cool. I like that one. I think it's pretty decent. Definitely worth, breaking out a sheet over or opening up a file on. This one looks like $14 cash per share is $8.72. Tons of cash burn. Yeah, sales are growing. Yeah, sales are large, but we're paying 4 times sales. Pretty good. Pretty good. Pretty good. We'd have to look more into what drugs are in the pipeline there. Too much uncertainty there. NGM. Another biotech. We're paying 1.2 billion. Sales. No. No. Nope, nothing I like there. I will just check what drug it is because I sometimes like to. I always like to just look at what the disease is. Pretty important, actually. So, all right, nothing I'm interested in there. Okay. This one's I'm gonna save this one because this is on this page as we see here. Okay. Don't care about downgrades. Okay. Pretty sure this company's trash. Sales of 40. Okay, you're paying $1 billion for $50 million in sales. That's not good. You would need an incredible business for that to make any sense whatsoever. And this has only got a gross margin of 1250. Yeah, that ain't gonna happen. So this is a for sure loser. Next. Okay. On to this other side. Now, I kind of will say, generally, when I'm looking at this side of the equation, these are now looking to short. Where are investors dead wrong, right? That's who I want to be playing against. Okay, this OEG. Okay, we have a price tag of 400 million. Income of minus 40 million. That's bad. Sales of $40 million. You're paying almost 10 times sales. What's the margin? For a 12.4% gross margin product, books $1 per share. We're trading well above book, way above cash. You can see the metrics here. This is not good. So this has got my interest. Energy thing. Solar. Anything that says solar nowadays just skyrockets. It's not like you can get in any of it because most of it's just no good. Okay, here's the news. Okay. Yeah, and this is the thing that you always need to ask. Okay, well, who's funding these projects? And don't forget, you always got to deliver on these contracts too. So, okay, so there's a milestone project. So definitely something that I would definitely look into. This would take me around a day to figure out. So not something I could get in tomorrow. It's not easy enough. One thing I will do right now while I have the time is check the balance sheet. Okay, just offered. See what these guys are doing. Okay. Okay, these are compensation. This is them just getting paid in common stock. CFO has a decent amount of shares. Okay. So not overly attractive, not overly attractive. Then I would need to dig into that contract, see what that is really looking like. How valuable is that contract? And are they going to, be able to deliver on that contract? So let's just quickly look at the balance sheet. I don't see. All right. Okay. 52 million shares outstanding. 34. 2. Accumulated deficit. Yeah, it's going the wrong way. This is something that is, it's gonna take you a few years to get your money. So these usually take longer than people think. Yeah, revenue, great. It's up, but you're talking about sales of 42 million for a $400 million company. Okay. Enough of that one. I will write down that ticker. So far we have OEG and we got VMD. All right. This one, I remember looking at this company so long ago. I can't remember if I liked it long. I don't know. I don't want to say. It's just trading so cheap. Yeah, I remember. Maggiano's and shit. Yeah, no, this is. I thought this looked like it was probably going to go bankrupt. I remember looking through their portfolio. But okay, so let's just look at the news. Yeah, I remember. Like you're getting a ton of sales for at $2 a share. It was like $50 million or something like that. All right, let's actually just go to investor relations here. Not what we're looking for. Okay. All right. No interest. Okay. One, I'm not going to short sell something that is got $500 million in sales and a market cap of $100 million. It's just way too damn cheap. Anything can kind of happen in these bankruptcies where, someone wants to fund it, that's it. You're crushed. Maybe perhaps keep an eye on it, but there's probably easier stuff out there, at least for me. Could have possibly taken the risk earlier at 50 million. $100 million, $60 million in sales, gross margin razor thin. 7 times book. Don't even need to look at it. No interest. Motley Fool's on it. Now, don't get me wrong, these can totally be gems in hiding, but I'm not really looking for gems in hiding. I'm looking for obvious. And I've come to kind of learn that the obvious stuff is the stuff that really, holy Toledo, 8 to 26. The obvious stuff is really what I feel like is easy to move, where you don't have to wait 10 years for the stock to go. It just takes a couple of people to start reporting on it. Okay, so 82 mil or 83 million for 227 million in sales, gross margin of 40. Okay, book is negative 80. That doesn't sound right. Okay, not the industry that I'm looking to get my money into. But who knows? So we've seen 2 real estate companies now. This looks like real estate exposure. Yeah. So that's one thing that you can kind of pick up on. Okay, we have these what looked like terrible investments are getting some sort of bailout and moving on news, and there could be some real value to unlock in possibly some of these if you want to give them a deep dig. The second one's too expensive for me. The first one would be more up my alley because that's something that could move significantly if you dig into it. So I probably will dig into that one. $29 million for not even a million. This company is forget about sales because it's not really relevant here. This is a medical device company. Got no interest in it. I've read this company like a million times. I'm pretty sure I've shorted this multiple times, like many of time. Like all of these pops in here, I'm pretty sure I was snagging them. It was underfunded. That's why. Those are generally good companies to sell. If you didn't know. $2.25 billion market cap, income of almost $100 million. Sales of $1.82 billion, but we're talking about China. Gross margin is only 31%. Not only, I mean, that's good enough for me. We can see sales are moving. .39 divided by 4.7. 0.39 divided by 1.27. Average, nothing too crazy. So one of the companies I like, a decent amount is Elevate. I'd much rather own Elevate than this company. So really easy for me to get off of this. Uh-oh. Not sure why the audio is no good. It's been a little bit of a rough rough stream for me with the audio. I kind of messed up early. I can only stream for maybe 15 more minutes, so hopefully the audio kind of clears itself up. I got to get through these companies before I head out. I did have music in the background, so maybe that was the buzzing, and I turned it off, so that may help. All right, so this company I'm very familiar with. God, this murders me to see stuff like this sometimes. So I was looking at this company. It's like a high-end furniture and stuff. So I was actually looking at like this Flex Steel, which also performed well. FLXS. Let's see what that's. Oh my God, at that 50. Holy Toledo. Unbelievable. Yeah, these were huge misses for me. So, gosh, this one was even bigger. Oh my God. Unbelievable. But they were trading so cheap. You come on here and you go, oh my God, $100 million for $400 million in sales and a 30% gross margin. You start looking through the business. Are they going to be able to clean up the act a little bit and start printing money? Very possible when, there's probably, you got to think like a business owner. There's probably a ton you can cut out of $400 million in sales. You could probably cut out a decent amount in operations and start producing, significant cash flow for investors. It was just one of the things that I liked. And I like playing from that side of the table versus like chasing something like buying something at $1 billion with $10 million in sales is just way harder. Or, it's more difficult in my opinion compared to playing it from this end where you're buying something at, $100 million that has $400 million in sales and, a good CEO. I'll rather bet on that company. What's going on over there? What's up with you? Uh-oh. What's wrong, Ed? You're all over the place this stream. Okay. So that's I don't want to say it's too expensive for me now, but it is trading with a lot more risk. It's got a significant move. And fact of the matter is you want to catch the meat of the move. So the meat of the move has now taken place. I think there's probably better opportunities out there. I mean, I actually, kind of know that there are. This is a pass for me. But it's a reminder to, don't be so afraid to pull the trigger when stuff gets so cheap. It's really I always say it's a risk reward game, and you really got to think about it that way. Okay, $90 million. Okay, trading pretty cheap compared to its book value and the amount of sales it's doing, but it's coal. I always say like don't buy into these dying industries, but we're return met. Like, these companies are always tough. And like, yeah, it's not really for me, to be honest. Okay, so we just did the coal company. Now we're on to the shipping company. Okay, once again, pretty cheap, $50 million, $20 million of sales. Okay. Pretty thin, really thinly traded stock. Pretty good gross margin. Let's see what they do. Ocean transportation services, dry bulk, iron, oil, coal, grains, fertilizers. Okay. That's probably why it's booming. Every shipping company is from Greece, basically. All the shippers are from Greece. Okay, we already looked at that one. Man, we got some big movers on this list today. Okay, so oil and gas refining, $200 million, 156 million, slim gross margin, you know, no income in the past. No clue why this is going out of control. It's not like the float's that tiny either. Was there a stock split? Oh, it looks like someone's going to buy this at, oh no. Okay, so it's actually buying these other shell companies. I have no clue what's going on there. No interest either, because I'm not getting my money there. No interest in banks. That's an ETF. Already looked at it. Okay. Don't care about upgrades. Another bank. Don't really care about it. Insider buying. We'll take a look at that. Too expensive for me already. I don't want to pay. I'm not paying 400. I'm not paying 380 for $60 million in sales. Yeah, very, very nice gross margin. Yes, we do have growth, but we gotta look. You would have to look into this entire portfolio. Okay, they got a couple of good clients, but I'm not really into the new issue, so maybe you might be interested in something like this, but I'm not. This is not beating out some of the stuff I have out there on my list. But yeah, basically that's it. Took, I don't know how long did it take to go through all these. So about 50 minutes to go through these. And then probably I only got 2 tickers here that I'm really interested in. Those alone will probably take around maybe an hour each. So maybe 3 hours total. You could go through a lot of stocks though. We just went through, I don't know how much are here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So about 20, so about 40 stocks. Let's call it 35 stocks that we just went through. And don't get me wrong, we didn't nearly do that much research, but we did filter through a lot of bad ideas that we can avoid, which is useful. And I kind of with that being said, if you do this is something that you can do every single day. And if you do this every single day, you're going to cover a ton of stocks over time. And your portfolio is going to be pretty good because you're going to find the best ideas. Because the fact of the matter is, I don't know how many people do this every single day. And like I kind of just showed you, you can do it in 50 minutes. And you'll go through so many stocks. This is so much better than doing nothing. And you actually can see why these things are moving. And you basically are just following your curiosity. So if there's a particular type of company that's moving that you're interested in, next thing you know, you might end up learning about the whole entire industry over, the course of a week or so. And you really, once you find something good, you want to go into it, in depth and follow it and see how it performs. So like my next step is always to get out my sheets, right? So I got my trading checklist, and from here I go through my fundamental analysis. I go through my scouting report. I go through, a potential bet that I think is possible. And then if I actually trade it, I do my checklist, go through the journal, got to gauge, management, all the important stuff kind of, happens in this journal. And then put together your plan of action, your plan of risk management, and then, execute it. And that system works really, really good, if I might say. So that's it. Hopefully you guys can start generating your own ideas. And I think idea generation is actually, one of the most important parts of investing. So I always encourage people that join Augury to, get your journal out, go through them just kind of like we did, find one that's interesting and then journal it and then share it back with, the rest of the community so we can look through it too. Kind of like a journal book club. If you guys are interested, if you made it this far and you're interested in a journal, make sure you check out the links below. They'll be in there. You can buy it on Amazon. You can buy it on my website. You can buy it on Instagram. And also check out, the investing newsletter. If you don't have the time to go through, 40 companies after, maybe after dinner or after work, subscribe to the newsletter because we'll go through them and we'll filter out, we'll basically curate them for you. So, and final thought, if you guys want to take our free 30-day investing course, go to auguryresearch.com/free course, sign up, go through the emails that we send you. We got all kinds of good lessons on there, and there'll be more, coming in the future. But I guess that's it for this lesson. Hopefully it was beneficial. I know there's a couple people watching. If you guys have any last questions, throw them in. I will try to answer them. I got like 5-6 minutes. And I'll wait, 2 seconds before actually closing this thing up if there's no questions. Hopefully the audio isn't too bad when I replay this thing and watch it on YouTube. But all right, it looks like there's no questions. And on that note, I'm out of here. Peace. Happy trading.